The war in Ukraine has dealt a major shock to commodity markets, altering global patterns of trade production and consumption in ways that have kept prices at historically high levels. Well, we have Matt Kindigan now join us to discuss the implications for Sub-Saharan Africa. Great to have you on the program, Matt.
Hi, thanks for having me on the show today.
Yeah, so how long do you expect global commodity prices to, remain high?
Certainly. So, our view here at Front of View is that commodity prices will remain elevated through the rest of 2022, and there is some risk of even more upward pressure for the rest of this year and into early 2023. Uh, in uh, in terms of what is driving this, so we do see the war in Ukraine being a major driver. Russia is one of the largest global exporters of many commodities, including iron ore, coal, and precious metals like gold and platinum. And given that the war in Ukraine is likely to last well into the end of this year, maybe into next year, we're going to see commodity traders look for alternative sources to reduce their risk of exposure to the conflict for the foreseeable future. What we're going to see as well is, even though there's going to be investment in mining capacity globally, it will take time for new mines to ramp up in terms of capacity, and even the existing mines, including in Sub-Saharan Africa, will struggle to increase production to meet rising demand. So it's really a simple story of demand really outstripping supply for the rest of the year.
That's quite incredible how much commodities Russia and Ukraine actually export to
Yeah.
the world. But, I remember, sometime last year, there was this conversation about the commodity super cycle. Analysts kept on talking about it coming. And did they see this war actually coming, or was it something else that was indicating a commodity super cycle?
So certainly, I don't think the war was anticipated by many people. I think it was not part of the base case for most analysts. But in terms of higher prices for commodities, this really it was anticipated to an extent by many analysts, and this is as a result of the global economic recovery that we're seeing. So as soon as COVID restrictions started to be removed fairly early on, after the first couple of waves of COVID by some countries, we started to see signs of very strong recoveries in economic activity, especially in Europe and the US, and also an acceleration in demand for things like renewable technologies, renewable power, battery-powered cars, for example. So even without the war in Ukraine, we would have seen increasing demand at a much faster pace for global commodities, especially metals.
Quite interesting, regardless of the war. But which countries stand to benefit most from the favorable outlook for the mining industry?
Well, from a sub-Saharan African perspective, I think we can we can divide countries into two groups. The first group is countries that will see immediate benefits from very strong demand for commodities, especially metals and mining commodities. Those include South Africa. So South Africa, a very large coal exporter, iron ore exporter, exporter of precious metals. And in fact, we've actually revised up our GDP growth forecast for South Africa as a direct result of the stronger demand for its metals and fuel exports. So certainly a very direct beneficiary this year. This will also affect or positively affect government finances in South Africa. We're certainly going to see improved prospects for Zambia and DRC. So big copper producers. Again, this is a result of much stronger demand for copper. We're also going to see more investment into both these markets, but especially DRC, as mining houses try to get hold of more ores from both those markets. Mozambique will also see quite a strong immediate benefit because it is a very large coal producer. But the countries that will see benefits in the longer term, not necessarily as quickly as other markets, include countries like Tanzania. We are seeing more interest in things like nickel mines in Tanzania. We're probably going to see more investment there over the next couple of years. Also, diamond mines in Angola are going to see a bit of an uptick in investment. And also West Africa, a very important source of nickel, gold, and other metals. So those countries will probably see a bit of a benefit, but not quite as immediately as other markets like South Africa.
Right, and we've seen the U.S. dollar hit new highs. And but
Yeah.
how would strong demand for mining and metal commodities affect currencies in sub-Saharan Africa?
Yeah, I mean, you mentioned the US dollar being very strong. We have seen the US dollar index rise close to multi-year highs. This certainly will weigh on pretty much every currency in sub-Saharan Africa. We're having to revise our forecasts for sub-Saharan African currencies at the moment. We're expecting a bit more downward pressure across the board. That includes countries that export metals and mining commodities. But for the big metals and mining commodity exporters like South Africa, again, we are expecting to see actually quite a strong currency. So even though there has been some downward pressure over the last couple of weeks as a direct result of the strengthening dollar, the fact that there will be such strong demand for South Africa's exports means that the rand will be supported to an extent. So certainly South Africa stands to benefit from its status as a major, or the rand stands to benefit. We're also going to see the Mozambican metical also supported as a result.
Okay, well, it'll be interesting to see how the currencies match up to the strong moving US dollar. Thank you so much, Matt Kindiga, practice lead, Sub-Saharan Africa Front of View. It was great having you on the program.
Great, thanks.